Hello again. So I'm trying to be more consistent in posting my videos, hence this one. So today we're going to go ahead and do a market update as well as talk about some of the Federal Reserve policies that were announced this week. So let's get into it. Okay, the markets. So prior to the virus situation, both the Dow and the S&P hit record highs. And then we had the downturn that we had in March, and then they've been slowly, steadily coming back out of it. So for the Dow Jones, the record high was at 29,000 plus. S&P was at 3,300 plus. The S&P now is at 3,400 plus, so it's actually surpassed its previous record. The Dow is at 28 plus, so it hasn't quite hit its record high yet. I expect it to hit it, so I'm not worried about that. It won't come as a surprise when it does. So that's where the markets are at. It's moving slowly and steadily up, which is what we like to see. Again, we don't want huge swings up or down. That volatility makes it less sustainable. So we like this type of just kind of slow, steady movement. As would be expected, I mean, the tech sector is doing very well. I mean, everyone's working from home. Not everybody, but a lot of people are working from home, and even if you're not working, I mean, you're still using tons of technology. You're consuming an immense amount of technology. So, as expected, they're all doing well. So there's that. Okay, now the finance sector, the banking sector, actually is not doing as well as they had hoped, and that's because they are very deposit heavy, meaning there's an immense amount of saving going on, which we don't typically see in the US. As if you guys remember from my previous videos, so the US actually is in the negative savings rate, meaning that we don't have savings, period. But when we have big downturns like this, where there's a lot of uncertainty, that actually changes. So in 2008, with the financial crisis, we actually saw an increase in savings. So we actually went into the positive savings rate. And then by 2010, we were back into the negative savings rate. Well, now we're slowly creeping back into the positive savings rate. And that's, again, to be expected when there's a lot of uncertainty for the future, just because people, want to make sure they have money for a rainy day, because we don't know what's coming down the road. So, and of course, the current climate in the U.S. is just chaos. So a lot of people are trying to save money. That makes the banks really deposit heavy, and the problem that creates for them is that they have to pay interest to a lot of accounts, and so even though there's not a lot of interest to be paid right now, if you still have a lot of volume of customers you have to pay the interest rates to, it still can eat away at profits. And so that's where that's coming in, where the banks are having a little bit of struggle with that, just because, again, they are so deposit heavy. And even though the rates, I mean, oh my gosh, the savers are being decimated, as always, whenever the rates go low, but it is helping the US economy, because then borrowing becomes a lot more affordable and more people are willing to do it, and we continue to have that flow of money in the US economy, which we need. It's vital. So having all those, borrowing, loans, all these loans being written, and people consuming those loans, that's a good thing. So that's helpful. As I stated before, we're seeing massive numbers of refinancing. Car sales are continuing to just do their thing. But again, it's really cheap to borrow everything right now. So a lot more people are doing it. So that helps the US economy. Again, it doesn't help the savers, but it does help the US economy overall. So that's a nice segue to get into talking about the policy changes that the Federal Reserve just came out with this week. So let's talk about that. Okay, so the Federal Reserve came out, and their big policy statement that they made was that they would like to target they would target inflation at higher than 2%. Now, why is this of any significance? That means that the policy stance the Federal Reserve will take under Jerome Powell currently would be that he intends to keep the rates lower for a longer period of time. So right now, like, unemployment is not great, but it's not as horrible as we had initially thought, which would then indicate that we should be starting to increase the rates. But if you target inflation at above 2%, that means we need to devalue the dollar more so that again, prices go up as dollar gets weaker. So if we weaken the dollar more, then we get that inflation pressure, and then that would help to hit the higher than 2% inflation target that the Federal Reserve is trying to accomplish. So it's not a big deal. It's not this historic change. I mean, in the kind of, just for the facade of it, it seems like a big change, but when you look at the nuts and bolts of it, it's really not. And let me explain why. Because it wouldn't have mattered who got into office, Biden or Trump. It wouldn't have mattered which one got in. Both sides are going to want to keep that rate low, which means they're going to put an immense amount of pressure on the Federal Reserve to do so. Now, Trump has made no qualms about doing that. I mean, he's done it all his, for his whole first term. And Biden, I'm assuming, would want to put just as much pressure on the Federal Reserve to keep the rates low, or appoint somebody that would view it that way if he got into office, because it's an appointed position. The chair of the Federal Reserve is an appointed position. So I'm sure he would want to have appointed somebody that would have favored that type of policy anyhow. So it's not like it's a surprise that the rates are going to be kept low for a long time. I don't know anybody that thought it would move very quickly. Just because both, again, it wouldn't have mattered which person would have gotten into the White House, both would have wanted to keep the rates low because it helps the economy, to boost jobs, to boost trade, boost a lot of stuff when the dollar is, valued lower. So it's really not, it's more like, it looks more impressive on paper than it is in reality. That's kind of what the change in targeting the inflation is at this point. So I'm not really impressed with it. It's nothing big. It's not a big deal. And it can change on a dime, because if whoever goes in, I mean, if Trump stays in office or if Biden goes into office, I'm not so sure Jerome Powell will survive either. So, and then whoever the new chair of the Federal Reserve would be, if there was a change, then they could just be like, no, we're going to target inflation at 2%. So, I mean, it doesn't have an enormous bearing at this point. It was a big deal when it was first announced, because prior to that, there really wasn't technically like a target that they were shooting for, at least not on paper, and nothing official. But then when it came out that 2% was kind of the target they're shooting for, and it was kind of made unofficial, and then eventually over the course of time it became official, we've kind of gotten used to it, so we've acclimated to it. So him saying he wants to target a little bit higher than 2, it's not a big deal. And if he says like he's trying to target 4 or 5% inflation, now that's a big deal. But a little bit above 2, that's really not gonna, that's just an excuse for him to keep the rates lower for a longer period of time. But that was going to happen anyway. So now he has kind of justification to do it, because their target is going to be a little bit higher than 2%. So that's where that stands. So it's really, again, not a big change in reality. But that's what all the hoopla is about. But the markets always love to hear this kind of stuff, that the borrowing costs are going to be kept more accommodating. The Federal Reserve is going to be accommodating. I wouldn't be surprised in the future that they announce, more bond buying programs, more than they already have. So anyways, that's where it's at for right now. Kind of a short video today, but that's okay. There's really, sometimes things are kept simple, and that's not a bad thing. As always, if you guys have questions, put them in the comment section below, and I will talk with you guys later.